Hi guys, today we're looking at the concepts of ordinary income, that's 5.0 in the lecture notes, and we're going to start with the question in 5.1, what is income? Now from week 1 lectures we will know that there's no definition of income in the Act itself. We talked about something income according to ordinary concepts in the class. And this is income that's been determined by the courts. So it is the courts that have come up with the definition of what income actually is. And that's what we're about to look at. We're not asking you to research the common law since 1935. There's a 1935 case in your lecture notes. We're not asking you to go through that again, but what we've done is summarised these characteristics of income that will help you work out whether an inflow or money coming in is income or not. So there's 9 characteristics in the notes, and they effectively start at item A and they go down to all the way down to item I. So don't treat these items as a checklist. It's not a matter of tick cross, tick tick cross. Yes, I have more ticks than I have crosses, so therefore this is going to be income. It doesn't quite work like that. These 9 factors have been determined by the courts as being essential in determining whether an inflow is income or not. Now we're going to spend a bit of time on this week. Your tutorial questions will take you through some exercises. Your tutors will talk to you about this again. So over the next couple of minutes, I'm just going to give you an overview. Your notes are very much in detail. You can look at them again and read through them thoroughly. So the first characteristic, income is something that comes to you. It's an inflow that comes to you. It is not a saving of outflows. So even if an amount saves a taxpayer from incurring an expense, the saving is not income. You also have something there, section 6-5, paragraph 4. This is known as the doctrine of constructive receipts. I'll give you an example of how this works. Let's say that I've earned $75,000 in a year, and I say to my employer, pay me $70,000 this year, and then next year I'd like you to pay me $5,000. Well, according to the doctrine of constructive receipts, I have dealt with that $75,000 in the current year. I have directed where it should go. So therefore, at that point in time in the current financial year, the whole $75,000 would be income. So in other words, the whole $75,000 didn't come in. Only $70,000 came in, but I directed the other $5,000 and where it should go. So because I've directed it, then that $75,000 is income in that current financial year. The next one, for something to be income, it must be money or money's worth. I have a client of mine, his name's Jeff, and he's a chippy. He's a carpenter. And he came over recently and he fixed a wall in my house, and the bill, he gave me a pretty good rate. It was $1,000. And I do his tax at the end of the year, and look, my bill to him is roughly $1,000 as well. So Jeff says to me, look, Wayne, I fixed your wall, you've done my tax return, I owe you $1,000, you owe me $1,000, how about we just leave it at that? We walk away and I don't give you any money. The money won't come in. Do I have to pay tax on the $1,000 on the tax return? What do you think? Do I have to pay tax on the $1,000? And the answer is, sadly, I will have to pay tax on that. It's money's worth. I didn't get the cash, but I did get the service. So if you have a look in the notes, we're in item B, it's money or money's worth, have a look at tax ruling IT 2668. That's called a barter transaction. The third characteristic, if you receive a payment every week, every fortnight, every month, it's more likely to be income. We'll keep it at that, nice and short. you get a payment every week, every fortnight, it's more likely to be income. The fourth one, and I think this is one of the most important ones, item D. There's no section that says that my wages or salaries, if my boss gives me a bonus at the end of the year, there's no section there that says that this is income. The courts have said over the years that when you do the work, you're doing the tax return, you're digging that hole in the ground, you're building that wall. When you physically do the work, when it's personal exertion is the name that they call it in the notes, then it will be income to you, to that person that's physically doing the stuff, if you want to call it that they're performing, the service that they're performing. What about property? What if I have a bank account, or if I have some shares in the ANZ Bank, or maybe I have a rental property? Well, what do they pay me? What does a bank account pay me? A bank account, I might get some interest. Or if I have shares with the ANZ, they might pay a dividend each year. A rental property, funnily enough, will pay rent. Well, these things are income according to ordinary concepts. Letter E, the next one. If the receipt is illegal, do we pay tax? The answer is yes. It doesn't matter. The gangster, the very famous gangster Al Capone, what did they get him for? I thought they got him for tax evasion, right? There's another case in your notes, the FCT against La Rosa. I'll let you have a look at that in your spare time and quickly read through that. It's quite interesting. Letter F, compensation receipts. Now, effectively here, we are talking about insurance. And the general rule with insurance is that if it's replacing an income stream, it will be income. If it's replacing something like a building, a car, a photocopier, it will be capital in nature. So it really does depend on what you're replacing. Item G, I'll give you an example. If I have $50 in my left pocket and I take it out of my left pocket and I put it into my right pocket, is that income? In other words, can I derive income from myself? If you look at the mutuality principle in your notes, you'll find that for it to be income, the source must be external. You can't derive income from yourself. A real life example of this, maybe if you're a member of an RSL, when you go into the RSL, you will sign in as a member or a non-member. Well, the RSL can't derive income from its members. It can only derive income from its external sources. So it's the people that are non-members, that's when the RSL will declare that income from non-members. So once again, you can't earn income from yourself. Item H, capital gains. And let's think of an example here. Let's say I have some ANZ shares. I bought them for 20,000 and I sell them for 40. Excellent. I've made a gain. I've made a profit. So my profit, bought them for 20, sold them for 40. My profit is $20,000. Is that ordinary income? This is called a capital gain. And in this situation, it's not income according to ordinary concepts. Now, we do spend 2 weeks on capital gains later on in the course, so won't talk about it too much now. We talk about that more in weeks 6 and 8. The very last one that we do today, and here's my example. A few months ago, my hot water system in my house, the house where I live, it broke down. And a plumber came and he fixed it. He charged me $400. These things are never cheap. So I paid the plumber $400 to fix my hot water system. Question, is it income to the plumber? And I think most of you will probably say yes, it's definitely income to the plumber. I know we haven't done deductions yet, but here's my question. Can I claim a tax deduction for it? You might not know this yet, but as we go through weeks 4 and 5, it will become apparent that it's my private house, it's where I live. I won't be able to claim a tax deduction. I'm going to make the payment. I'm going to pay the $400. It won't be a deduction for me, but that doesn't mean that it's not income to the plumber. So just because I can't claim it doesn't mean that it's not income for the plumber. It's not a mirror image. It doesn't have to be a mirror image. So in other words, what I've just said, just because something isn't a deduction to the taxpayer doesn't mean that it's not income to somebody else. Well, that's it for our podcast today, guys. Thanks very much for listening, and I'll see you in the next lecture.